Hello there. Welcome back to Financial Accounting Info. In this video, we want to look at the calculation of an accrual of an expense. We are going to calculate the accrual of salaries in particular. So before we calculate the data accruals, let's try to identify the financial year. So you see that we have got a heading there which is saying pre-adjustment trial balance 31 December 2021, which means our year is starting on 1 January 2021, and then it's ending on 31 December 2021. Very important to take note in terms of calculations of prepayments and accruals. Whenever we want to make a proportion in terms of the number of months, we can always refer back to the financial year so that we know how many months are we calculating for, or how many months are are we removing, or are we adding. Remember, when we have got accruals, we have to add them. If they are prepayments, we have to subtract them. Remember, we're trying to comply with matching concepts whereby we are saying what belongs to this year should be charged this year, and what doesn't belong to this year we should be removed. So in the form of accruals, it means it's something that belongs to this year, but it hasn't been paid. So that amount has to be included for this year. That's why we add for accruals. Then for prepayments, we are saying it's an amount for the next financial period that has been paid this period, but it doesn't belong to this period. So that's why we subtract for prepayment. So if you go to additional information, would see that we have got an explanation that we have there what salaries, which is 6, which is saying salaries were paid for 10 months only. And then on the note part saying on 1 December 2021, salaries were increased by 10% per annum. So what does it mean? It was increased on 1 November 2021 by 10%. And we know that our year is starting on 1 January to 31 December. And this salary was increased by 10% on 1 November, which means in November and December, the months when it was increased, which we are having 2 months. And then these are the months that are not yet paid for. Remember, this salary was paid for 10 months, which means the 10 months are January, February, March, April, May, June, July, August, September, October. Then if you count this, you see that we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So we've got 10 months that were paid for. So the remaining two have been paid, and these two also relates to this 10% increase, which is in November and December. So here we are saying we've got November and December. So what we are saying, we want to calculate these 2 months and add them back to the amount that were given in the list of balances. If you go back there in the list of balances, you would see that we've got an amount that we are given there. That is the actual amount that was paid for salaries. So we can go down to check that amount. You'd see that salaries we have it here. Let's try to see where we have got the amount of salaries, which is here, which is 34,500. So this 34,500 relates to 10 months. So we are saying uh, we want to calculate the monthly payment now. Since we are saying 34,500 is one that was paid, which is being referred here by 10 months only. So it means this is equal to 10 months. So to find the monthly payment, now we are now saying divided by 10 to see the monthly. Then if you divide by 10, you get 3,450. So 3,450 is before it was increased by 10%. And the month that they were increased is the month that which were not paid. So if you got November and December not paid, those are the ones that we want to calculate. So on November, it's increased by 10%. So we are saying 3,450 times. Remember, this is 100%. This relates to 100%. Let's say this one is our 100%. And then we add the 10% that increased, and then we are going to get your 110%. And if you express it as a decimal, you divide by 100, then you get 1.1, 1.10. So here it means you're multiplying by 1.10, then you get the monthly payment. So let's just say you multiply by 1.10, and you get the monthly payment for November and December. So we want 2 months, which means if you multiply this, you get for 1 month, then you multiply by 2 to get these 2 months that are still not yet paid. That is the accrual amount. So if you multiply by 2, then let's try to see what you get there. You are going to get 7,590. So it means we have got here 7,590, which means this represents the total for the 2 months that you are having here. So this is an accrual. So what we are saying for an accrual, remember we're saying we add. So it means in the other section, we are going to say salaries. Salaries, then in brackets, we are going to say 34,500. Yeah, let's try to see. Here, you are going to say 34,000. 34,500, then you add your 7,590. Then on the other section, we are going to put the amount there. So if you add the two, 34,500 plus 7,590, let's try to see what you get there. Let's calculate. We've got 34,000, 34,500. Then you add 7,590. We are going to get uh, we are going to get 42,090. So 42,090 represents now the total of salaries for that period. So it's equal to 42,090. So we've given a provision of the accrual. So the accrual amount that we have here is this one. This represents the amount of accrual, which if we are going to the balance sheet, we are going to take this and put it under current liability as an accrual of an expense. So this is what we have, guys, in terms of this video. Those who have subscribed, please subscribe and share. We are still coming with more videos as we prepare for exams. As for this video, I'm signing out.